Trump's big, beautiful bill is coming, and it could either save you tens of thousands in taxes or it could cost you big if you're not ready. We're talking bonus depreciation, short term rental loopholes, and the real estate investor playbook flipping in 2025. Let's break it all down. And more importantly, let's get you ahead of the game. At this point, please like this video and subscribe to my channel and send this video to someone who had paid a huge tax bill in 2024. I'll love you forever. Donald Trump first used the phrase big, beautiful bill around immigration, but now he's applying it to tax policy. While we haven't seen much of the full bill yet, he's promising something bold: a return of the 2017 investor-friendly tax code designed to protect income and stimulate growth. If you invest in real estate, this could be the playbook for the next 4 years. Let's go back to 2017. Trump passed the Tax Cuts and Jobs Act. And if you're in real estate, you remember how powerful it was. We're talking 100% bonus depreciation, lower corporate tax rates, pass-through income deductions, and massive first-year write-offs. If you understood cost segregation, you could write off hundreds of thousands of dollars legally. But here's the catch: those cuts weren't permanent. They're set to expire in 2025. That includes bonus depreciation, pass-through deductions, lower income tax brackets, and even tax exemptions. Trump's big, beautiful bill, he wants to restore them and make them permanent, especially for real estate investors. Let me show you how this works. You buy a short-term rental for $600,000. You get a cost segregation study. They identify around $180K in short life assets, stuff like appliances, flooring, roofing, and even landscaping. With 100% bonus depreciation, you deduct that entire $180K in year one. So if you use this strategy and make $180K of income, you'll pay $0 in taxes. It's not a loophole. It's in the tax code, and Trump wants to bring that back. Now let's add the short-term rental loophole. If you materially participate in your STR, you can use the depreciation losses to offset active income. That's right, your W-2, your 1099, your business income. You don't need to be a full-time investor. You just need to own one properly structured Airbnb and materially participate. Doctors, business owners, sales reps are using this right now. In order to qualify as materially participating in the business of operating the STR, you must meet one of the following tests. Number one, you must participate in the activity for more than 500 hours during the year. Number two, your participation in the activity constitutes substantially all the total hours by all individuals. And number three, which we generally focus on trying to meet this test, you must participate in the activity for more than 100 hours during the year, and your participation is not less than any other individual. Like I said, we generally focus on meeting this test. There are other tests to qualify, but they generally do not apply to this STR situation. Even if you used our B&B turnkey service, you can still materially participate. You will spend at least 100 hours in the involvement of the property, and we won't have an individual more than 100 hours. But here's where the urgency comes in. Bonus depreciation is phasing out. Here's the timeline. In 2023, 80%. 2024, 60%. 2025, 40%. 26, 20%. And then 2027, it's gone. If nothing changes, the most powerful investor tax strategy disappears. That's why Trump's new bill is such a big deal. It would reset bonus depreciation to 100% starting in 2025, going back to his inauguration in January. Here's some of what the critics say versus the supporters. Critics say this favors the rich and increases the deficit. Supporters say it fuels growth, investment, and entrepreneurship. But here's the truth. These tools aren't just for billionaires. They're for anyone who knows how to use the tax code, like a business owner, a doctor, doesn't matter. This is about knowledge, not wealth. Let's look at real examples. Investor one buys a $750,000 Airbnb in Tennessee. Cost segregation identifies about $210,000 in depreciation. The STR loophole applies, and she wipes out a $75,000 tax bill. So what should you be doing right now? Number one, build a relationship with a tax strategist. Number two, learn how STR participation rules work. Number three, evaluate properties that qualify for cost segregation. Number four, prepare your 2025 buying strategy. And number five, set up your LLCs and pass-throughs before the law changes. If Trump's bill passes, you want to be ready day one. To have these tax incentives apply to 2025, the property has to be live by the end of this year. So now is the time to make steps and plan, not wait until the end of the year before it's too late. Trump's big, beautiful bill might be one of the most powerful tax reforms for investors in decades. If you're in real estate, this is your moment to plan, not panic. DM or comment the word bill in this video if you want help crafting a tax strategy. Or drop STR loophole in the comments if you want a full breakdown on the next video. Like, subscribe, and send this video to anyone who owns real estate, because tax law isn't about savings, it's about strategy.